Hello students, and how are you? In GST introduction part we were covering. So here in GST, that is goods and service tax. So why there was need of this goods and services tax? This GST. What was the need of this GST? Actually, this GST, before to this GST, there was no uniform system of tax in all over our country, and different states there were different tax. And second thing is that the goods were sold at different states at different prices. Second thing is that one more thing was there. There was tax upon tax. Means one tax has been taken and that goods has been sold. Then again, when again it will be sold, then again tax will be charged on the tax that already has been charged. Now in this system of GST, it is not there. Whatever tax has been charged, that is reduced, and that is reduced from whatever is being collected. Means extra tax, only tax is charged on the value that has been increased in the good. For example, in earlier system, what used to happen, old system, if a producer is there, there are different on the different levels how this tax used to affect. First producer we can take, second is wholesaler, then third one is retailer. Okay, and then comes the consumer. Okay, this is consumer is he used to buy for his own purpose. So producer, when he used to produce the goods, he used to buy the goods. Whatever goods he has suppose he bought the goods in 60 rupees. Okay, it is 60 lakhs, 60 crore, whatever we can take, but I am taking 60 rupees. And he's taking 40 rupees profit out of this. So 100 rupees, and tax rate, tax rate is 10%. Here and in this new system also. In new system also, if GST. Producer used to, this is the value of the purchase and it is the amount of profit he is charging. Then total 100 rupees he want to sell. So the tax he used to collect at the rate of 10%, and that is 110. So sales price of this will be 110. This is 110 is the sales price. He used to buy the goods at 110. Okay, and now he wants 40 rupees profit in this. Okay, and then the value is 150, and then it again charge this tax 10% on this. So this is 160 rupees. Okay, now 160 rupees retailer. Now the good come to the retailer. Now it again want to charge 40 rupees, and then plus that is 200 rupees, and then 10% tax. So the final consumer, it used to go at 210. Okay, so this way there was the system of tax. So every time this tax has been paid, on this also tax used to be applied here, and on this also tax used to apply here. So every label the tax used to be applied, and tax on tax system was there. In the new system, okay, if this is 60 rupees he had bought the goods, and 40 rupees he wants to take the profit. These goods, this raw material, when he bought, this producer has bought the raw material or other goods for to produce the goods. He must have paid tax on that, GST he must have paid. Now he want to sell it at 100 rupees. So this 40, on this 40 no tax has been paid. So here tax will be charged on this 100, on this 40 rupees. Not in 60, because this has already been has been charged on this. Now it will go for the next slab. It will be 100 rupees plus tax will be added to that. This now is sold for 100 rupees plus tax. Now this he wants to take 40 rupees profit here plus tax, that is 10%. So this, on this 100 rupees tax has already been paid here, to 100 rupees tax. On this 100 rupees tax has already been paid, and he, whatever price he want to increase by taking his profits, so on this only the tax has not been paid. So now the tax will be levied on this, and now he will sell plus tax, and now he is going to sell it at 140 plus tax. Okay, so 140 plus tax. So now he want to sell it in 200 rupees. 200 means 60 rupees profit he want to make, or 40 rupees will take. 40 rupees profit he want to make. So 180, 180 plus here tax amount. So here 140, this already has been paid. So this amount remains with tax. So tax will be levied on this only. Only 4 rupees profit will be levied here. Now see the difference of tax. Now the same good is there, 210 was paid. The final price of this good was 210. Here when we see, it is how much? 60 plus 40. So 4 rupees. 4 rupees will be added here. 6 has already been added here. Then 4 rupees added here as tax I am taking. Then 4 rupees added here. So much, how much total tax has been added? 6 plus 4 plus 4 plus 4. 4, 2, 4, 3 is 12 and 6, 18 rupees tax was there. So 18% means 180 rupees price, 10% of this 80, 18% is this 180. 180, 10% of this of 180 is 180 is 18 rupees. So this amount of tax has been charged. So finally, what is the price? 140 plus 40 plus this 18, 198 rupees would be the price in the final. Okay, so this way, this is the difference. Now come to this other way, different slabs of this. When we talk about the slabs of this tax GST, we can mainly categorize it into 0%, 5%, 12%, 18% and 28%. There is one more this category, that is 3% and 2.5% that is there. But mainly this is there. So in this category, 0% category, in 0% category where 0% GST is applicable, that those goods are very necessary goods for life, like food items, like vegetables, like milk for the children, milk for children, such type of things are kept in 0% category, means there is no tax on those goods. And in 5% category, which are used by little, which are little means which is low income, but and that is also for low income group, we can say. So on this the things which are this 5% tax is applied, that is sugar, spices, tea, coffee, etc. Even this life-saving drugs, etc. And on this 5% tax is there, GST is there. Then on 12% when we say, then it is applied on processed food. Processed food means like packed food, we can say, like chips, etc. Such type of things, namkeens, such type of things, and processed food. So that 12% tax is levied on that, on income to the. Then comes the 18% tax. 18% tax is applied on hair oil, toothpaste, soap, capital goods. Here, hair oil, the low income group also used this hair oil, but it is capped in 18%, and toothpaste also used by low income group, but here it has been capped in 18%. The reason they must be knowing, but here in this category 18% hair oil, toothpaste, soap and capital goods. Capital goods means like machines, etc. On those goods 18% tax is this applied. Then comes the 28%. 28% tax is levied on those goods which are not used by the low income group. It is luxury items like cars, ACs, even refrigerators, all these things. These are on these things, this beverages, and on this 28% this tax is levied. So these are the different slabs of this. Okay.